Hey everyone, welcome. In this video, I'm going to talk about my 3 top stocks for the month of January 2021. Now, the 3 stocks that I'm going to mention in this video are going to start from relatively safe, in my opinion, to slightly more out of the box and riskier as we go on. So I hope you're okay with that. And without further ado, let's get started. The first stock that I think that everyone should have in their portfolio in January 2021 and moving forward this year and this decade is Google. Google's share price is currently trading at around $1,800 per share. Its market cap is around $1.2 trillion. This is a huge company that pretty much everybody knows and uses in one way or another. Even if you're an Apple lover, which I am, I use tons of Apple products, I am still an avid Google user. Even on my MacBook and on my Mac, I still use Google Chrome as my main browser. I still use Gmail, I still use YouTube. You're probably watching this on YouTube right now. Google also manufactures and sells their own computers and cell phones. They have their own software, Android, with their own app ecosystem. They're one of the leaders in the online advertising space with their Google search ads, as well as their Google display ads, which you see across most of the websites online. Google's also in the cloud, AI, and tons of other industries that are just going to continue to grow and be dominant industries for the next decade and decades to come. If you don't have Google in your portfolio right now, one way or another, I strongly recommend you consider adding some. Because in the long run, I just see Google continue its domination in the online space and continuing to be a leader in the technology sector. Google currently has a P/E, price to earnings ratio, of around 35. So it's pretty modest in terms of how much growth is currently built into the stock. If you look at other tech companies, their P/E ratio may be way higher. We'll look at one next up in this video. Other reasons why I think Google is a great investment are their profit margins. They're currently running at around 20% profit margins, which is really strong. Looking at their balance sheet, we can also see that they have a ton of cash and not that much debt. So they're not very leveraged right now. The only thing that I think is stopping most people from investing in Google is its current share price of around $1,800. Most people might not have that much money to invest in Google each month, so they may have to save up each month in order to even buy one share. I think that is definitely a deterrent, and Google should definitely consider a stock split to bring that share price down and make it easier for beginner investors, retail investors to get into the stock. For now, if they don't do a stock split, I do recommend investing in it through a fund. One fund that carries Google is QQQ, which basically follows the NASDAQ and has many other top tech stocks within it, including Apple, Microsoft, Amazon, Tesla, Facebook, Netflix, and others. QQQ's share price is much lower than Google, so it's a great way for retail investors and beginner investors to get in on Google and these other tech stocks in a much quicker, easier, and diversified way. I definitely recommend you check out QQQ, and if you haven't seen my video on investing in tech ETFs, where we analyze QQQ and ARKW a little bit, definitely check that out if you haven't. And now let's go on to my number 2 stock pick for the month of January 2021. Okay, so my second stock pick is definitely much riskier than Google. It's Square. Square is a mobile payments company for small to medium-sized businesses. So it's in the finance technology space. FinTech. I'm sure some of you have seen Square being used already. Some of you may already know Square or have used it. Some of you may have used Square without even knowing it. Square was created and started by Jack Dorsey, who's also the creator and owner of Twitter. Now, I'm not going to talk about Twitter. We can go over that company another time. In this video, I want to focus on Square. Square currently has a share price of around $241. Its market cap is $109 billion. It currently has a P/E ratio, price to earnings, of 366. So it's definitely more aggressive than Google. There's a lot of growth already built into this share price. However, the fintech space is estimated to grow substantially in the next decade or two, and we can already see that in Square's revenue growth and profitability as well. Square has been growing revenue, but only recently has it been starting to reach profitability. This may be a great time to get in. Now, I do expect more volatility in this stock, so if you don't want any volatility in your portfolio, definitely steer away from these types of aggressive growth stocks. But if you do want some growth in your portfolio and you're willing to stomach the extra risk and volatility that comes with it, and you're willing to invest for the long term, I do think Square and other fintech companies are definitely some stocks and companies that you want to include in your portfolio. If you do want some Square in your portfolio, but you don't want that much risk and volatility, I do recommend you consider investing in a fund that has Square in it. One fund that I like for the fintech space is ARKF, the fintech fund managed by Art and Kathy Wood, who's gained a lot of popularity the last year, mainly because of their huge returns in the biotech space and with Tesla as well. The fund ARKF has companies like Square, PayPal, also Tencent, which is the owner of WeChat, one of China's biggest apps for mobile chat and mobile payments. It also has Alibaba, so another Chinese e-commerce company that also has Alipay, a fintech branch. These two Chinese tech companies are estimated to grow substantially in the next couple of decades as well. And I know that most people in the West squirm when they think of investing in Chinese companies, but I do think that there's still a lot of potential in that market. And I'll definitely make another video in the near future that goes over the main Chinese stocks that I'm looking into. So that's my number 2 stock pick, Square. The last stock that I want to talk about in this video is not a tech stock, so you might be thinking, what, Joe, I thought you only invested in tech stocks. But no, I don't invest only in tech stocks. I also keep my eye out of other industries and sectors that are set to grow and other companies that are leaders in those spaces. So my third stock pick for January 2021 is Beyond Meat. Beyond Meat is a leader in the alternative meat or vegetarian meat industry. There's this whole shift of society wanting to eat less meat or being pressured to eat less meat for health reasons and for environment reasons. And I do think that shift is going to continue to move forward and grow in the next decade or two and in this century. And Beyond Meat is one of the main leaders in this space. So I definitely think it's one of those companies that in the long run we'll definitely want in our portfolio one way or another. Now, Beyond Meat is a new company and they seem to be growing a lot, and they also seem to be struggling with profitability in terms of financing that growth. So they're currently not profitable. So to me as an investor, that definitely means it's a riskier stock, but I do see this company growing in the long run. Beyond Meat share price is currently at around $118 and their market cap is $7.5 billion. They're not profitable, so they don't have any earnings, so they don't even have a price to earnings ratio. Now, despite their lack of profitability, we can see that they've been able to grow revenue year after year in an amazing pace. This is a great sign as an investor. Looking at their balance sheet, we can also see that they're low leverage. They have a lot of cash in the bank and they don't have a lot of debt. That's also great to see, which means that it can sustain itself for the long run and really continue pushing itself as a leader in the space, buying itself more time to be able to grow and find profitability down the future, bringing more value to shareholders. Those are the 3 stocks that I wanted to talk about in this video. I hope you liked this video. If you have any comments or questions or other stocks that you're keeping an eye out this month, definitely let us know in the comment section below. If you like this video, hit that like button. If you haven't subscribed to the channel yet, definitely subscribe. I'm gonna wrap this one up, so I will wish you a good day, a good night, and I will see you next time. All right, have a good one. Bye.